What is the role of an audit committee? Is an audit committee required? There has been little guidance available to help businesses understand the quality of the audit services being provided to them. In this new corporate governance series, our second topic is adding substance to audit committees. Pooja SHUKLA, senior lecturer from Hong Kong Metropolitan University's Lee Shau School of Business and Administration, will discuss the laws, the best practices, and the ideas behind audit committees.
I welcome you all to our second seminar of the series. We have chosen a very interesting topic this time, adding substance to your audit committees. So in this seminar today, we are going to take a look at the interesting factors determining the scope of work and the performance of the audit committee. At the same time, we will see how to improve the performance of audit committee and generally of the whole company. Before I begin, let me tell you a joke. Once upon a time, there was a shepherd looking after his sheep on the side of a deserted road. Suddenly, a brand new Ferrari screeches to a halt. The driver, a man, gets out and asks the shepherd, "If I tell you how many sheep you have, will you give me one of them?" The shepherd looks at the man and then looks at the large flock of sheep grazing and replies, "Okay." The young man parks his car, connects his laptop to the mobile fax, enters a NASA website, scans the ground using his GPS, opens a database and 60 Excel tables filled with algorithms and pivot tables. He then prints out a long 150-page report on his high-tech mini printer and turns to the shepherd and says, "You have exactly 1586 sheep." The shepherd cheers. "That is correct. So now you can have one of my sheep." The young man takes one of the animals from the flock and puts it at the back of his Ferrari. The shepherd looks at him and asks, "If I guess your profession, will you return my animal to me?" The young man answers, "Yes, why not?" The shepherd says, "You are an auditor." The young man says, "Wow, how did you guess? That is correct." The shepherd says, "Very simple. Firstly, you came here without being wanted. Secondly, you charged me a fee to tell me something I already knew. And thirdly, you do not understand anything about my business. Now, can I have my dog back?" I hope you like this joke. I think this joke sets a pretext of what are the repercussions when you hire an auditor who might not be so well versed with the type of business or the industry or the size of business that you have. In that case, you might have to wait for an entire period of time until the auditor finishes his job and gives his auditor's opinion on the financial statements of your company. At that time, you might realize maybe we should have chosen someone else. And this is where audit committees come into picture. You do not have to wait for the auditor to finish his job. Rather, if your auditor is not perfect fit for your firm, audit committees play in this role of smoothing the process and making sure that the output is productive. Hence, audit committees add value. In this seminar, we are going to discuss when audit committees already add value, how can we add substance to these audit committees so they add even more value? So let us begin. So in today's seminar, we are going to briefly discuss the laws, the best practices, and the ideas surrounding audit committees. We are going to briefly touch upon listing rules and the corporate governance code and the practices. And I have also brought in a few tips that I have learned from my own professional experiences while working for listed companies internationally. If I ask you, when I say the biggest company in the world, what comes to your mind? You might say, okay, maybe Apple, maybe Microsoft, maybe about Saudi Aramco, or Amazon, Tesla, Facebook. These companies have grown so big. The recent news I read about Apple was Apple has crossed $1 trillion mark. You know that such kind of money, a lot of countries in the world, even their GDP is not of this kind of size. So imagine when you are dealing with a corporation, with an organization which has multiple number of subsidiaries or different types of diversified businesses. How do you think when you, as a member of an audit committee of that company, you sit in the audit committee meeting, how do you decide the future of that company? How do you plan the next 5 years for a $1 trillion company? I hope you understand how much of a burden, how much of a responsibility it is to make sure that while you are complying with all the required regulations and laws, you are also making profitable decisions. So today in this seminar, we are going to discuss ideas and practical tips so that your audit committee members just do not sit there like paper tigers, but they add value. So before we begin, let us briefly see what are the benefits of audit committees. To be very specific, it improves the quality of financial reporting because they directly are in contact with the external audit function and the internal audit function. They provide a forum to raise issues of concern. They also boost the internal audit function because the internal audit arm directly reports to the audit committee while it also reports to the senior management. Audit committees also strengthen the position of the external auditor because of the continuous relationship that they build throughout the period of audit. And in overall function, it creates a climate of risk management awareness. Just imagine if you are a listed company and you do not have an audit committee. How much of trust would you be able to put in that company as an investor if you think there is nobody responsible for the functions that audit committee takes care of? The audit committee also enables the independent judgment by non-executive directors, which we would see in the other slides, and it increases the board effectiveness, accountability, transparency, and objectivity. And last but not least, it increases public confidence. Now let us briefly go through the listing rules of Hong Kong regarding audit committee. So the law has mandated that every listed company must establish an audit committee comprising of non-executive directors only. It must have at least 3 members, and one of which should have a qualification relating to accounting or financial management. The majority of the members must be independent non-executive, and it must be chaired by an independent non-executive director. The terms of reference must be in writing, and in case of failure to set up an audit committee, you have to inform the exchange immediately, and you must form the audit committee within a period of 3 months of such kind of vacancy being created. Now let us see what the Corporate Governance Code says. The spirit of corporate governance is growing, and at such a fast speed that even when I was preparing for this particular seminar, I would prepare one slide and I would find something new that has come into force, that my current slide that I prepared yesterday is useless. So I want to remind you, in the profession of corporate governance or law, you must keep yourself updated about every changes the government or the regulators are making. As of now, the Corporate Governance Code says that the full minutes of audit committee meetings must be kept by a secretary. And generally, the secretary of audit committee is the company secretary of the company. There are prohibitions on the former partner of existing audit firm acting as a member of the audit committee. And the terms of reference should include the relationship with the auditors, review of company's financial information. I suggest you that if you are interested, you should go to the website of your favorite listed company and read the terms of the reference. And these terms of reference should be uploaded on the exchange's website and also the company's website. It also mandates that any disagreement between the board and the audit committee regarding the appointment or resignation of the auditors should be put in the corporate governance report. The audit committee should also be provided with sufficient resources. And the terms of reference of the audit committee should also require it to review the arrangement, to raise concern about the financial reporting, internal control, and overseeing the company's relationships with the external auditor. What is the outline of terms of reference? It must include the membership, the details of the memberships. It should have a provision of your secretary, what will be the quorum, how frequently your audit committee is going to meet, how much is going to be the notice, and the minutes, how well they will be prepared, where will they be kept, and the duties of collectively the audit committee. It will also include the details of the chairman. This is another new guideline given by the Financial Reporting Council. It is talking about the guidelines for effective audit committees. It relates to the selection, appointment, and reappointment of auditors. We have got another consultation paper by the Hong Kong Exchange regarding the review of corporate governance code and related listing rules. I encourage you all to go through this and read the result of this consultation paper. Now quickly, let's see the audit committee oversight checklist. What is the gamut of responsibilities they cover? They start from the financial reporting and internal controls, financial statements, external audit, internal audit, compliance and ethics, risk management, and any kind of fraud that could be there. Looking at this diagram, you might think, is there anything audit committee does not do? Probably the answer is no. They are the most important committee of a listed company. After the board, they are responsible to take care of the maximum workload in terms of decision making, and that is why it is so highly regulated. Now let us discuss reporting to the board. The reporting lines between the audit committee and the board should be formalized, and the communication channels must be very clearly defined, and the committee should report to the board on a regular basis. A lot of the times I have seen in my personal experience, because of internal politics, people keep putting off as to any new information that is available, and they think that, okay, we are going to have the meeting next month or the month after. My suggestion is, if you as the member of the audit committee face that issue of a newer agenda item which you think is a pressing issue, I suggest that the reporting should be done on immediate, or if not immediate, as soon as possible basis without waiting for the next audit committee meeting. The board members should be aware of any issues settled before the financials are presented to them for approval. And the committee chairman should present to the board periodic written reports containing the findings of the committee at least on annual basis. And remember, the more you report, it is easier for the board to consider the findings that you have submitted as audit committee, so that your findings, your investigations, your suggestions, the board can use in their decision making. Any delayed decision by your audit committee to inform the board is going to cost the company a big cost. So what are these reports? They cover the financial and other reporting, internal control and risk management, anything about the audit, and like we discussed earlier, audit committee has a lot of other responsibilities and duties. So the audit committee chairman should report regularly and formally to the board on the matters of any kind of suspected fraud and irregularity. They also have to make sure that they are reporting any kind of cases involving whistleblowing. Whistleblowing is a very important tool to contain fraud and make sure that the company is able to prepare itself before the storm comes. And it is the responsibility of the audit committee to make sure that the whistleblowing issues are taken well care of as per the policies of the company, and in addition to that, common sense. Anything on anti-bribery or failures of internal control, suspected infringement of laws, or anti-corruption. So as you can see, these are the main headings where you think the audit committee will be responsible in addition to what they are generally responsible as per the law. But I assure you, in the coming months, this list is going to get bigger and bigger, because these days the regulators are becoming more and more careful. The investors have higher expectations out of audit committee. Audit committee members, since they have a big responsibility, they should be proactive, and they should also hold separate meetings with internal auditors and external auditors separately, with no executive directors present, so that it gives them a platform to have a heart-to-heart discussion with the audit committee. One other important issue is the whistleblowing policy. As of now, it is in the recommended best practice, but I assure you in the future it is going to become a procedure in the code where the company will have a higher responsibility to take care of the whistleblowing issues. So let us see what are the other audit committees doing. 19% of them are providing explanation of change in fees paid to the audit firm. 69% of them are disclosing the audit firm's tenure. 18% of them are disclosing the audit committee responsibility for fee negotiations, and 51% discussing the criteria considered when evaluating the audit firm, and 39% disclosing that the audit committee is responsible for oversight of cybersecurity risk. Now, just for your reference, I got the latest report from CLP. You can see this is how it looks like. Of course, it covers much more papers, but I just got you the screenshot. So if you are interested, I expect you to go through and read the whole report on your own. So audit committee meetings should be adequately planned and held. They should monitor companies' financial reporting process, internal controls and risk management, and a statement in the company's annual report should disclose the function and activities of the audit committee. As you are aware that there is a three defense model that we discussed earlier, in that case, majorly, the audit committee is mandated to make sure that there is no fraud or they have used such mechanisms to detect fraud, and how to deal with the fraud, how to conduct an investigation rests at the table of the audit committee. So now we will discuss briefly what are the tips for the audit committee to detect fraud. The audit committee should have discussions with the employees across the divisions. In my professional experience, what I have generally seen is that you see audit committee members only at the time when they have to conduct the meetings. Throughout the rest of the period, you never see them. So my suggestion is the audit committee members should do something extra. They should give the feeling to the company that I care extra for you. And not just to give this feeling, but also to secure themselves, because they are equally liable in the eyes of law. So they should have discussions with the employees across the various divisions from different departments, or maybe within the regions wherever the company is operating. They should observe the behavior of executives with the directors inside and outside of the boardroom. My suggestion is use those signs inside and outside of the boardroom to see if your executives have a relationship where they might be influenced, or if they are creating an influence over the board, because this would help you as the member of audit committee to understand at a deeper level as to what could be going on. Because remember, as per the agency theory, the shareholders and the directors have a relationship of a principal and agent. The agents of the company, that is the directors, they only want to report the good matters to the shareholders. And it is responsibility of yours as a audit committee member to make sure that you do the things right. You should keep a regular dialogue with your compliance groups to make sure that there are things that are not just put under the carpet, and things that should be brought to your notice, not just at formal level, but maybe at an informal level. So maybe going out and just talking to your compliance team, maybe they tell you about a legal matter which has not become so big, but it could become big. So you should not wait until things are put on your table, but rather you should create that relationship and that softer dialogue with the compliance team to get some kind of extra information. You should keep an eye on the rotation of CFOs. Sometimes it is possible that the CFOs may not be perfect best friends of their directors. And it is possible that they may be very, very good friends. In both cases, it is important for you to know what kind of relationship your CFOs are having with your other directors. The appointment of accounting team in other subsidiaries. Sometimes it happens, which I have seen in my professional life, when the same people in the accounting team are appointed as directors of various subsidiaries, and a lot of times overseas as well. So you need to see if one person or a few persons, the company is over-dependent on them for financial information, not just in the home country, but also in the country's overseas subsidiaries. In any case, from the risk management perspective, over-reliance on one person is not going to be good for your company and for you as a member of audit committee. The accounting areas that require a great deal of management judgment. I think generally when you come on board, when you are new, everything is new to you. You are in the process of understanding how the company works, the culture of the company, the relationship between the executives. And then gradually you find out how the transactions are dealt with. And then gradually you learn how the accounting teams are using the areas where accounting principles cannot be used, but they need to use their own judgment. Remember, when it comes to judgment, it is possible that instead of using what is good for the company, executives could be using what is good for them. So as a member of Audit Committee, you must make sure that the accounting judgments are fair and good for the company, for the benefit of the company and the shareholders and the stakeholders. You should also go through the design of the company's cyber risk management programs to make sure that there are no loose ends to this kind of risk management policies. If your company is operating in more than one country, you should go and visit all the global locations with the CFO to get a reality check on the ground reality of the legal and regulatory situation in those countries. Because it is very easy to think, while sitting in Hong Kong, on your email, what could be happening in your, let's say if you have mines in Africa, maybe let's say you have manufacturing factories in Vietnam, it is very easy to sit at your table in Hong Kong and think, oh yeah, everything looks okay. But in reality, a lot of things can go wrong. We have seen how executives maximize their profits. They may not be telling you a lot of things. So for you to be proactive, I suggest when you join in a new company, maybe you can make this as a policy. Within the first year, you can visit all the locations where you think it is important and the company has a significant business. Now let us see the role of Company Secretary in Audit Committee. The Company Secretary has to facilitate the communication between the board and the committee and access information required by the committee. And like I said, the board secretary is generally the company secretary of the audit committee too, because that person already has the information that is available to the board, and it will be easier for that person to access the information of the audit committee. And also for confidentiality purposes, it is better to have the company secretary, the same person. And minutes of the committee meetings should also be prepared by the company secretary. Let us discuss what are the best practices of Audit Committee. You should circulate its minutes to the board, thereby keeping them informed. You should report to the board, and minutes of the Audit Committee should be formally approved by the Audit Committee before reporting to the board. And disclosure of the existence, function, and performance of the Audit Committee to the shareholders is an important element of transparency and good corporate governance practice. Now let us discuss what is the perfect size of an audit committee. Should we have big committee meetings in terms of a lot of members on the team, or should we have very few members? Do you think if there are a lot of people on the audit committee, they bring with them a lot of experience, and cumulatively it will be beneficial for the audit committee? Or do you think we should restrict it to a very small number of people so as to maintain accountability? What do you think is better? The right answer is there is no one-size-fits-all approach. Depending on the nature and business and the size and the industry of your company, you need to make sure that it is a proper balance and the size of the audit committee is just right. Now let us discuss the independence and quality of non-executive directors in the audit committee. So, of course, the directors have to be independent. The quality, the right skills and experience, because audit committee will require a lot of decision making on a lot of different topics. You should have soundness of judgment to give an important feedback that the accounting treatment of a particular transaction or the internal control systems, in your opinion, in your judgment, if they are working fine. you should have a clear understanding of the company's businesses and policies. And you should have a proper commitment of sufficient time. It is very important to make sure that you hire only such people who have time. The person should also have sufficient understanding of the financial, accounting, and auditing matters. And that person should also be able to practice a healthy degree of skepticism. And all the members should be non-executive directors, and majority of them independent. Now let us discuss who is the right candidate for our audit committee. Someone who is familiar with not just accounting knowledge, but also familiar with the external environment, which includes social, political, economic, legal, and industry that you operate in. Someone who is able to use his judgment in instances where exact figures are not available. And someone who is able to challenge if an alternative assessment is more relevant. You should be able to check the relevant items disclosed in the financial statements. Someone who is able to read between the lines for unusual items like acquisition, contingent liabilities, or litigation. It is very important that you are able to put forward your doubts in a positive manner. You may not have to be a troublesome member, you do not have to be a MAFON member, but you must be able to add value as a part of the audit committee. And you should be able to address the material uncertainties that cast a threat to continue as a going concern. These days, legal issues or issues regarding data or privacy or digitalization, these things have become so extreme that not just the regulators, but the general public, your stakeholders, they view them as a very serious threat. So you should be able to make sure and give your judgment that this kind of item is much more than a tick as an item on the agenda table. Maybe this item is going to become so big that it would eventually go back to the board, or it will become a big question mark. So it is better to prepare for that, maybe using your internal control methods, or maybe creating another committee sometimes if an issue becomes too pressing, if an issue requires your immediate attention or investigation. Sometimes it is even better to have a subcommittee prepared to take care of that particular investigation. That is much more efficient, and it saves the time of the audit committee. And of course, finally, that committee, that subcommittee, can report it to the audit committee, and audit committee will have the final say. Now let us see the disclosures in the annual report. It should have the composition of the audit committee. In the corporate information section, the role and functions of the audit committee, and the work audit committee undertook during this financial year, significant issues, internal control, risk management, and the conclusions, number of times the committee met and the attendance, and the statement on the independence of the audit committee. So, in terms of meetings, how can we prepare for the meeting in a better way? The first idea is to have a proper policy on time. Generally, people follow a 3-day policy. For any type of meeting, they make sure that all the information is made available to the members at least 3 days in advance. It could have all the agenda items, the appendixes, or any additional information that the members may need. So my suggestion is you should have at least a gap of 1 week before the meeting starts, so that you have given a plenty of time to the audit committee members to come to the meetings prepared. And these days there are a lot of board portals available where you can post all the information. and the audit committee members may be told that we have already posted everything there, and it should become like a practice that you follow every time. And maybe you can send a gentle reminder that everything has been uploaded there, or maybe a notification goes that something has been posted for your reference. The use of executive summaries. This would avoid any kind of information overload. You should be able to highlight the insights and key takeaways and conclusion, rather than the person given a big pile of papers. You can highlight the changes made and any information that requires that person's special attention. You can highlight the changes wherever you have made before you attach these things. This will help the members to focus on the changes which require their attention. Use of appendix and all the items that are in addition to the main agenda items. This will help them to decide which items they would be focusing on. They provide you like an index of priority, so that when you glance through that, you will get an idea as to where to begin with. It also happens when I'm able to see this information, maybe as an audit committee member, maybe at personal level, I need a legal opinion, whether I should be considering this item, or maybe I need to talk to other committee members, so that before we meet, we should already have the legal opinion about this particular agenda item ready with us at the time of the audit committee meeting. I have got you a screenshot of the agenda planner, which will help you to understand how generally the audit committees plan, or how they decide how to prioritize the topics of discussion. And here we are talking of audit committee meetings of listed companies. So they need to prioritize, and they need to make sure that just because they are prioritizing, the other issues should not get neglected or ignored for a longer period of time. So it is better for the company secretary to make sure that the company secretary maybe can send a gentle reminder that this agenda item has not been discussed in the last 2 or 3 meetings. Now, how do we prepare the meetings? The purpose of the meeting should be made explicit. The chairman should be responsible for the agenda, and of course, the chairman can take the help of the company secretary to do so. The material is prepared in sufficient detail and in a format which allows the committee members to understand it, and the material is distributed in sufficient time for the members to read it, to prepare for the meeting. So audit committee meetings, in addition to audit committee members, the other invitees are the external auditors, the executive directors, internal audit head, and the finance director. This helps them to have a wholesome meeting, and any information that the audit committee needs from a particular branch of service, let's say internal audit, or let's say legal head, it is easier for them to have the information right there from the person responsible for it. How frequent should the audit committee meet? It varies with the range and complexity of the issues. They generally typically meet 4 to 5 times each a year if there are no pressing issues that they need to have another new meeting. And they normally meet prior to the finalization of the interim or the year-end accounts, and other meetings address issues like internal controls, risk management, etc. Now let us discuss what are the things that hamper the effectiveness of an audit committee. Non-cooperating executives. You all are working adults, and I'm sure you probably are much more experienced in understanding how non-cooperating executives can create an environment where it is difficult to achieve the goals of a team. And here we are talking about audit committee. If the committee members are unskilled, I hate to say this, but a lot of committee members I have seen, they do not have a proper experience. It is very important that you select people who are just not enthusiastic about accounting or finance or corporate governance, someone who has really worked at the ground level, someone who has dealt with the regulators, someone who has dealt with the tax authorities, someone who has been with the auditor, not someone who only knows how to lecture about accounting or business or finance or corporate governance. Nepotism and favoritism. You are my favorite director, you stay in my audit committee. You are my second favorite director, you go to the remuneration committee. This kind of attitude is very difficult to achieve the goals of an organization. The committee relies heavily on the information provided by the management and auditors. As I had explained earlier in my slides, that the audit committee member should not see himself or herself as a prop or an item in the annual report of the company, but you should take serious efforts on your own to go out and reach out to the sources of information or gather information yourself, which will help you to deliver your expertise, your services in a better way, and your judgment in a better way. Time commitment issues. Like I said, a lot of people have taken directorships of n number of companies and they do not have time to focus on even one company. There could be energy issues like maybe you are sick or you are too old. Sometimes I have seen that it has kind of become like a profession. After retirement, you sit on all the audit committees or boards. But it is dependent on the chair and the board to see that the person who comes with a wealth of experience in this particular matter, but is he or she able to stay vigilant or really committed to the betterment of the job for which he or she is hired. The remuneration, the committee members should be adequately remunerated to reflect the time, commitment, and responsibility. The remuneration should not be too much, should not be too less. That is generally the norm. But in my opinion, I think that depends on the nature of the business, the kind of industry you are in. If you are sitting as a audit committee member of Apple versus if you are sitting as an audit committee member of a newly listed company, I think the remuneration of these two committees should be reflective in the numbers that you give out. A lot of students ask me, how much will I get if I am a member of audit committee? So I got you this research. Sadly, for Hong Kong companies, most of the companies chose not to disclose. So I got you the information for India, Malaysia, and Singapore. I want to remind you, please do not think that this kind of remuneration is attractive. What you need to strike a balance is on the two factors, the remuneration that you are getting and the liability that you have. No kind of remuneration can compensate the amount of liability that you have as the member of audit committee. So these are just a token of gratitude, this kind of committee meeting fees. This is not a compensation. This is what you need to understand. Now let us discuss the most important part, the chairman of the audit committee. This is the leader who decides the direction. Where are you going to steer this ship of audit committee? That person must be an independent director and appointed by the full board, should have an appropriate relationship with the working partners. It should not be too close or it should not be too difficult to talk to. Should be able to maintain a close contact with the board's chairman and the finance director, auditors, and the head of internal audit to make sure that the timely information that the audit committee is going to receive and prepare its report and pass it on to the board is done in a timely and clear and accurate manner. The chairman should also be able to defend the territory of the committee wherever any kind of dispute arises, and should also have a clear understanding of the authority in case of any investigation. Remember, it is the chairman who will have the last say to decide whether this investigation is done or whether this investigation needs more time and more resources. And that is why the role of chairman becomes so important. And as you saw, the kind of areas that come under audit committee, the chairman will have to use a lot of discretion. The chairman must choose substance over formalities and should use the executive and private sessions effectively and provide effective feedback to the board. So these are the attributes of a strong committee chair: someone who is highly experienced, understands the business risks and controls, and intellectually curious and not bogged down with the external directorships or audit committee memberships that he or she has in n number of other companies. Someone who is able to demonstrate the elements of the charter that need to be addressed and prioritize the most important agenda items and decide how much time to be spent. Now let us see what happens in the absence of a right chair. As per the regulations, we need only one financial expert to sit in the audit committee. And it is very likely that maybe on a few days that person is sick or not able to attend. In that case, imagine if your agenda items require a set of skills or a pair of eyes from the financial or accounting perspective and that person is not there. It is very difficult to have a conclusion of the meeting or your feedback that you would be giving to the board on that particular transaction. So it is always better idea that you must not have only one, but should have spare financial experts. Lack of succession planning, it is very important to make sure that the person that you have right now or the persons that you have right now with financial knowledge, you should also have a plan as to when these people retire, what kind of people are going to come on board. Irregular evaluation will keep the unskilled and troublesome people on your committee. And hence, it is very important to evaluate regularly so that you are able to switch and bring fresher blood or fresher pair of eyes to your table. Now let us see what the law says. Board has the full responsibility and authority for management and supervision of the board. So the board cannot simply say, this is not my decision, this is what the audit committee suggested me. The law says, even though this function has been delegated to the audit committee, but at the end of the day, it is the board who will be responsible. The audit committee does not take over the functions of the board, and hence the board has to make sure that the feedback given by the audit committee, the board should also use their own common sense and business sense on those feedbacks given. The audit committee reports and make recommendations to the board. That means ultimately it is the board who has to decide whether to say yes or no to a particular feedback or recommendation given by the audit committee. Now let us see what are the drawbacks of audit committee. It creates a barrier between the board and the external auditor because the external auditor and the audit committee are regularly in touch, and it is very possible that the kind of relationship I as the board member have with the audit committee, and I might not be aware of the relationship between how the communication is going on with the audit committee and the auditor, and that committee is working as a barrier. So in the absence of audit committee, maybe I would be able to have a better dialogue with my auditor. But each time, since audit committee is already appointed for this function, the auditor has to go through the audit committee. Influence of a dominating director. Sometimes audit committees have people who think that they know more than the auditors, and they think that it is not recommended to give any feedback or make recommendations about this particular transaction to the board. And in this way, it is only and only the company that suffers. Lack of experience amongst members and inadequate feedback to the board. Sometimes people think that it is better to be politically correct than to be actually correct, and this way they think or they hesitate in providing an honest feedback to the board. Board's over-reliance on audit committee is going to create a lot of issues because the board thinks this function has been delegated and now we are free to concentrate on the other matters. A lot of paper tigers are sitting in the audit committee who are just there to sign at the attendance sheet and never provide their honest feedback or their honest judgment. They are simply obeying the rules on paper, but never on spirit. And this is going to create issues for the company. Now let us see the tips to enhance the effectiveness of the audit committee. The audit committee should promote the internal audit function more than just a formality. It should become a forum to raise the issues that the board is deliberately ignoring. It should provide a platform to the auditors to be heard formally and privately. The scope of the committee review should not be limited to the company's activities, but as the whole group if they fall within the same board. So you might have seen that a lot of companies have subsidiaries or sister concerns or even branch offices. So it is better if the scope of audit committee, if it is covered under the same board, then the audit committee can also take the responsibility of covering these subsidiaries or branch offices. They should review the terms of reference regularly. This is a very important point. The rotation of audit committee members should be designed in such a way that they retire in different years so that the whole of audit committee is not replacing all the experienced members at one point of time. Rather, it should be done in a phased manner so that a few members are going and a few members are coming. So at all the times, the audit committee has a proper availability of proper skilled people who have been in the audit committee for a few years and a fresh blood which is coming now, and the communication between the old blood and the new blood remains. And regular evaluation by an independent party is a must. And last but not least, I hate to say this, of course, I'm not generalizing, but in my professional career, I have seen a lot of audit committee members are quite senior citizens. A lot of audit committee members are still used to having the paper form of work. So they may not know how to use technology. So my suggestion is that we can train the older members or who are not very well versed with using technology to how to use technology so that they are able to check their emails, they are able to see where things are attached. And if you are using a board portal, then it is important to arrange simple training sessions for them to see where the board papers, the audit committee papers will be uploaded and how they can change or give their comments. So I hope this would have helped you understand how value addition can be done in case of an audit committee. Before I leave, I want to give you this funny quote that I found. It says that a committee is a group that keeps minutes and loses hours. And there is another one. A committee is a group of people who individually can do nothing, but who as a group can meet and decide that nothing can be done. I hope all the audit committees of which you are members or secretaries, this is not the case, and you are able to add substance to your audit committees using my seminar and the suggestion and the practical tips I shared with you. I hope this will help you to become a better company secretary or a board member or an audit committee member. I will be bringing new seminars covering better topics and more interesting topics, and I will see you soon later. Thank you very much for your time and attention.